Hello, everyone. This is Joshua Hayes at BigWaveTrading.com for your November 18th market wrap-up for your November 19th session. Let's start it off with the Dow Jones Industrial Average, and as you can see, it was a very bullish day as the market opened up at 82.73, ended up trading down as low as 81.05 before rallying all the way back up to 84.77, closing at 84.24.75. This left a nice little reversal intraday, giving a nice little tail, just like on Thursday. And the other great thing that we see today, look at the volume. It ended up being much higher than the 50-day volume average, which goes along with the day on Thursday, which was November 13th, and goes along with the day on October 28th. So there's 3 days of above average volume on good up sessions for the Dow Jones Industrial Average. And something you will notice here, while the market is kind of in a consolidation area for the past month plus, the relative strength lines on the Dow Jones Industrial Average has gone up even while it fell. While it fell in September to October, the relative strength line went higher compared to the S&P 500. Excuse me, and continues to do so even now as it hits a new high sent from, let's see how far back we can go. Well, into, wow, multi-year highs on the Dow Jones Industrial Average as the market stays in a, goes lower and lower, which shows me that there's like a flight to safety, that big caps are definitely going to rule the roost, and they're holding up much better than small caps and speculative stocks. Now let's move on to the S&P 500, and you can see the same thing. We have a nice little tail here. After 2 lower volume days, we had a higher volume, but still below the 50-day volume average bounce today, up 0.98%. And what I forgot to tell you about the Dow Jones Industrial Average is that today's 1.83% gain can technically, I guess, by IBD standards, be called a follow-through day. Here was day 1 of the rally on Thursday, showing you right here, 11/13. Why was it day 1? Because on a lot of the other indexes like the New York Stock Exchange, we hit new lows. And by hitting new lows, we reset the base count. So even though you see the Dow Jones holding up, because relative strength-wise it's very strong, it was still considered day 1. This was day 2, day 3, lower volume each day, no distribution day, holding above the lows. This is now day 3. And this is actually the second up day. What am I talking about? You know why I thought it was a follow-through day? Because somebody was asking if we're looking for it, and you know what? I'm going to correct you right now. Whoever was in the chat room talking about a follow-through day today, I did not look clearly at the indexes. This is only day 2 of a rally attempt. This is day 1, 2, 3, 4. This is day 4 of a rally attempt. This is only the second up day. Now, what we must see next is a day of higher volume than today, like tomorrow, at least up 2% for me. And I don't want to see it on the Dow Jones Industrial Average. I also want to see it on the S&P 500. And now that we show you here we can also see this is only day 2 of a rally attempt. This was day 1, 2, 3 days down. The first and second day down, which is day 3, and on day 4, the second day of the rally attempt. So we're now looking for the follow-through day, which is going to be a 2%, preferably, or higher gain on volume, much heavier than today. And now let's go look at the NASDAQ. And as you can see, the NASDAQ, let's see, move in a little closer, another beautiful intraday tail to match the intraday tail on Thursday, and that hit a new low from the October lows. But from the October lows, you can see open body with tail, tail, open body, tail. And on the pullback, you can see baby tail showing minor intraday support. And you can see above average volume on the up day here, on the big up day here, and even on the way down in September, big accumulation days. So I assume that the accumulation distribution in IBD is around a B for the NASDAQ by just looking at it. And you got to understand, low volume pullbacks and higher volume bounces is very bullish. So the NASDAQ also is looking, this is day 1, day 2, day 3, day 4 of the rally attempt, second day up. So now we are looking for a day higher on heavier volume. That is what I want to see. So this is only the second day of the rally attempt. That's good. Day 1, day 2, 3 pulls back. Day 4 is an up day. Now I'm looking for the follow-through day to get committed to the market. I don't know what IBD is going to say today. I don't know what they're going to call, like if they're going to count the old lows from October for the Dow Jones and then call today a follow-through day on the Dow Jones Industrial Average by saying that this is confirmation of this follow-through day because this day is still holding. I don't know. Because I got to be honest with you, I've been following the market on my own. I haven't been using IBD. Because without longs out there, I personally do not need IBD. I need IBD to look for great future longs. And right now, the homepage is giving all the stocks I need to know to put it into watch list. I got 440 CanSlim qualified stocks, and only about 80 of them are above the 50-day moving average, and half of them are above the 200-day moving average. So it's not a clean slate out there. Now I want to show you the S&P 600. As you can see, day 1, day 2, day 3, day 4, the rally attempt, it closed slightly lower. That's why you see the S&P 600 going lower with the S&P 600 price, the relative strength line down here, while the Dow Jones Industrial Average during that same time has gone lower, but the relative strength line has zoomed higher because big caps are in. And NASDAQ, which has tech stocks, are still out, thus the relative strength line hitting a new low even today, while the indexes hold new lows on a closing basis, and the S&P 600, despite it holding new lows on the indexes, is getting near new lows in the relative strength line. So the next down day will probably put the S&P 600 below. The Russell 2000 is no different. Today was a down day, 0.84% down. This is the more speculative, more high growth tech stocks, high growth stocks, period. And this is where the speculative money likes to go. And the fact that this is down while the safety Dow Jones Industrial Average is up 1.8 doesn't make me that bullish on the short term. What I do like to see is that the VIX did hit 73 today, which is getting close to that old high of 89, as you can see here, 89.53. Closed at 67, but it's still high. When we turn, we can see big gains. Really, really nice gains. So I don't want to actually, there is a stock that I'm long that's up high enough that I can show everybody, like Q-Core. You know, this is the day that I wanted to go long, and if it would have opened where it closed that day, we'd be up 43%, but instead I'm up only around 31%, 33% here, but I have about a 31.5% gain or whatever. And it's been really great. And you can buy this off a bounce off the 50-day moving average on big volume. It's got to be like this. And BOP's got to go the other way. As you notice, BOP's going from green to yellow. If it goes to yellow BOP, I'll probably end up selling more, just to teach you guys how I do some selling in a bear market. In a bull market, I wouldn't sell. I'd let it bounce off the 50-day moving average with yellow BOP and go back to green, because that's what normally would happen. But in a bear market, I don't know. I don't think it will. So just showing you that in an example. Let's see how much time we have left. 8 minutes, so we got 2 more minutes. So I want to look at oil to see what oil's looking like. As you can see, it closed at 0.39, which is the lowest it's seen in a long time. When's the last time it hit 54? In early 2007? Let's see, 54. Yeah, in January of 2007 was the last time. So if you went long oil in January of 2007, you're now down negative 1.7%. And if you bought all the oil hype at 150 thinking it was going to go to 200, you're down over 60%. 62.5, 62.54. So you're down 62.54% if you bought it around the 150 area thinking it's going to go much higher. And as you can see here, global demand has really shifted because we're back at the 2007 area, negative 1% since early 2007. So oil's much, much lower. And how about that flight to safety? How's gold doing? Oh, not that great. But here is something. Let's look closely. Look at all the bullish intraday tails. As it goes and hits the lows of the intraday session, it bounces back and closes higher. There's tails everywhere. Open body, open body, open body, open body, open body. Tails all over the place. So gold, since it's right around the old support area in September, is probably finding a low here. It could bounce. But the thing is, the 50-day moving average is death across the 200-day moving average, and the downtrend in the 200-day moving average, as you can see by the line barely clicking down each time with the downtrending 50-day moving average, is going to make it very hard, as you can see in September and October, for gold to get back above and hold. But what is holding? The United States dollar. And as you can see, another up day. And since it's broken out of this little flag pattern, since I've shown you, it's higher. And since it's above the 250-day moving average, it's now up almost 17 full percent. So I'm going to go ahead and end it there. This is Joshua Hayes of BigWaveTrading.com saying aloha.